Good morning, everyone. Well, a thin market doesn't necessarily mean a quiet market. On the contrary, rates were unusually volatile yesterday, in part because of the Thanksgiving holiday in the U.S., which thinned out the market. As a result, the dollar's performance was unusually wide and, if I may add, unusually kind of surprising, too. It ranged from up about 1% against the New Zealand dollar to down about 0.5% against the Swedish krona. The commodity currencies continue to weaken, along with commodities themselves. The New Zealand dollar's performance was particularly puzzling, as it came after New Zealand business confidence rose to a near 15-year high, and the money markets have increased the odds of a January interest rate hike in New Zealand to around 40%. Apparently, the New Zealand dollar is being dragged down by weakness in the Australian dollar. Similarly, the strong rally in stocky following the weaker-than-expected retail sales in October was surprising as well. That may have been in anticipation of a strong third-quarter GDP figure for Sweden today. The market's looking for up 5% quarter-on-quarter, which would be a turnaround from down 0.2% quarter-on-quarter in the second quarter. Euro-yen and dollar-yen continue to move higher. The usual end-of-month deluge of data from Japan had no influence on the market, even though core inflation in Japan moved back above zero for the first time in 5 years. That might indicate that the Bank of Japan is beginning to have some success in creating inflation and so alleviate worries that they'd have to take further action. I think the rising tensions between China and Japan may be exerting some pressure on the yen. Both euro-yen and dollar-yen seem likely to move higher, as long as, in my view, as long as that crisis is worsening. The key indicator of the day is the preliminary Eurozone inflation data for November. It was the sudden fall in inflation last month that triggered the ECB's surprise cut in interest rates at their November meeting. The market's expecting a small rebound in the headline CPI figure to plus 0.8% year-on-year from plus 0.7% year-on-year in October. The preliminary core rate is also forecast to slightly accelerate. Now, after Thursday's greater-than-expected acceleration in German inflation to plus 1.6% year-on-year from 1.2%, anything else besides higher inflation would be a serious surprise. Higher Eurozone inflation will take some pressure off the ECB to cut rates, and therefore should support Eurodollar. Elsewhere, Canada publishes its GDP data for September. The month-on-month release is expected to show a rise of 0.2%, which would be a deceleration from plus 0.3% in August. On the other hand, the year-on-year rate is expected to rise to 2.1% from 2.0%. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Giller, head of Global FX Strategy at IronFX, wishing you solid trading.